Welcome to my weekly review. Today is Saturday, July 26th, and you're looking at a daily chart of the Nasdaq, which was up 50 points on Friday or 0.24%. It just keeps chugging higher. We have an all-time closing high of 21,108. So when indexes make new highs, you got to be bullish, and it's been trading above. I have this on the 5 EMA here. So the Nasdaq's just been trading along the 5, which is incredibly strong. And this magenta line is the 21. It just pulled back to the 21 one time here on June 23rd. But it's earnings season, and I'm a little more cautious during earnings season because you get hit with collateral damage, some shrapnel, as I'm going to point out here in a little bit. But I'm a big believer in earnings. We're in the teeth of earnings season now. Coming up this week is probably the biggest week. The next couple of weeks of the year, we did have Google and Tesla last week, but the index is now 6.1% above the 50 and 2.4% above that 21, that magenta line, which you pay close attention to. But surfing the 5 there, 0.5% above the 5. It closed on Friday, so incredibly strong index, which isn't everything. We look at leading stocks, and you can see last week it was up 212 points or a little over 1%. So, yeah, and the volume was 38% above the average weekly volume. So that's it for the Nasdaq. This video contains earnings from last week, some themes that I like, and then some trades I had last week, and then earnings reports that I'm looking forward to next week. All right, I want to get into it a little bit because, like I say, I'm old school. I'm earnings. Everybody has an agenda. Everybody trades differently, and we're like we all have our individual, unique fingerprints. And your trading is going to be unique to yourself, and unlike mine. It has a lot to do with time frames. Our age. We can't control when we were born, and our objectives and goals in the stock market. So some people like to be aggressive and take more risks. Some people are more adverse to risk and like to be more conservative. Some people like dividend stocks, some people like growth, momentum, there's something for everybody in the stock market, but you have to figure out what is best for you and what you can tolerate in your style and strategy. And I think that's really important. Anyway, I'm going to get to a couple of earnings reports from last week. Some gappers here that I'm paying attention to. This is Gentex. Nice move on Friday, as you can see. Same with COUR, Coursera, a nice 36% move. This is breaking out of a base. And this is in that group, the computer software, education media with Spotify and Duolingo. It's a smaller company, obviously. Still, after that big move, still below 2 billion market cap. But if we take a look at the weekly here, that's a beautiful breakout and advancing into a stage 2 advanced phase. And you could see the earnings line heading north, and the stock is heading north. So that one looks pretty good to me. I don't really know exactly what they do. I have to learn more about that one, but I do like the move, and I also like the move in this one, Scholastic Media Books. You wouldn't think so these days, but nice move there. 24% move on Friday, and pretty much the same profile as Coursera, breaking out of a stage 1 base, advancing into stage 2. But this earnings line is heading south. So 712 million market cap on that one, a small one. And I know you guys want to get to the big ones, and I'm going to get there here, starting with GEV. Nice move here with GEV. This is my largest holding currently, and it just broke out of this base here back in, yeah, May. So since that low, since we got liberated back in April, on April 7th, this thing was down to 252 and now it's run up to 644. I didn't do the math on that, but yeah, this thing's a big winner and not even the biggest winner in the group. If you're looking at the group, which I'm going to get to in a minute, so I'm not gonna do that right now. GEV had a nice move on after following earnings, so earnings do matter. And of course, Google reported last week, and their report I read through that, and their net income, this is a cash cow right here. I don't see how, you can't park some money in this one. They have so much cash. I don't know what the FTC is going to decide to do, if they're going to break up search, or YouTube or, Chrome. I don't know what they're going to do. But I think no matter what the decision is, this stock's going to rally. a relief rally type of thing. And this is a good place to park some money long term. You can see it had that 3 weeks type pattern, ran up into the print, 2.7%, and was up 4.3% last week. But it's still not at its high. This is still in a base. That high was 207.05 back on February 4. So Google was fantastic. Tesla, not so much. Like I said, this is a battleground stock. It's just too hard for me. Going sideways, consolidating in a base below its 200. Yeah, big red numbers here. That kind of avoid stuff like that. NEM, a mining stock that reported and had a nice response, up 7% on Friday. A lot of the gold stocks had good weeks. Gold is one of the top performing industry groups this year. Another stock that reported and had a favorable response was Deckers. It closed near the low of the session. You see that daily closing range of 3%, which you don't want to see. It was up to 126, closed at 116. But still, overall, the growth was phenomenal. 24% earnings growth. And the Hoka brand was 20% of year-over-year growth, and UGGs was 19%. So those two brands are carrying Deckers right now. URI had a nice response as well. This is breaking out of a double bottom base pattern, as you can see, but it moved 9% on Thursday following the earnings report. Still in a base, but extended from its moving averages and near new highs there. You can see right near the high. Yeah, nice 10% move for United Rentals. This goes to like, more construction type play, 57 billion market cap on that one. So that's no small company. Pace Holdings, nice gap higher and now flagging, yeah, it didn't follow through and make new highs. It hit 501 and then pulled back. The low there was 436 and it undercut it a little bit. Which day? 426 the following day, but still flagging. When you go up, 55% in a day, you got to expect some profit taking, right? But still flagging, allowing this moving average to catch up. And if this five here, um, the green line, so that if that's the low, 426.50, I would, if you're going to buy that, I wouldn't let it go any lower than that. At 447, that's a 20-point drop. And that's probably what, about 5 or 6% for MedPace. But if you're interested in that one, I mean, that's a hell of a move, pulling back to its moving average and lighter volume. That's what you want to see. MedPace, a nice move. A couple more. RPM reported, had a nice response above the 200. Yeah, we'll take a 9% move. And then Fix. Fix is a beast. Yeah, big move. Gosh, I remember when I was fooling around a couple years ago with this thing around $200. A friend of mine, a trader, I think it was the summer of 23, maybe in here. Yeah. Oh, $160. Yeah. Back here when it was making these tight patterns and just ripping. And I thought, this thing's not going to go much higher, right? It's just an HVAC company. Now it's got nearly 25 billion market cap, comfort system. Okay. So it wasn't all good news here. Otis reported their business is up and down, and the stock was down on the report. FI, another loser. Yeah, not so hot. In phase, pretty tough for the solar group right now with the current environment. Chipotle, what a drag. This thing dragged the entire restaurant, retail restaurant group down. It was down 13%. Its largest drop in quite some time. These guys had a 50-for-1 stock split, and it's been dead ever since. You can see the big, large float now. This is just a bloated pig. And, there's too much competition in the group. I think, there's just other businesses that are, taking some of their market share too. IBM had a good report, accelerating earnings growth and sales growth. The market didn't like it. Something about their Red Hat and their software business, the market didn't like, but this is probably an opportunity here to get IBM down below, was high as 296. Now you're getting it at 260. Yeah, IBM, I think that will respond. And I mentioned, collateral damage during earnings season. You have to be mindful of, this is Flex. Okay, so they reported and they fell, nearly 8% on Thursday. And you look around at some of the other stocks in the group. CLS is a powerhouse. This thing was down nearly 3% just on that news. Same with Sanmina. this thing dropped hard, nearly 5% because Flex had this not so stellar report. Even the powerful Jabil was down nearly 5%. So this is what I'm talking about being careful during earnings because you get, shrapnel from other reports. It goes the other way too. I mean, uh, GEV was reported, right? I just mentioned GEV, and they had a strong report. I'll get there in a minute as my computer is getting a little wonky here. GEV had the big report, right? And then it took OKLO with it. OKLO had this big, powerful move last week. I think it was up, yeah, 9%. Thank you very much. And SMR and the others in the group. So you get pin action both ways to the downside and the upside. That's just my point there. All right, I'm going to move on to a group that I like. I've been making daily videos about, I don't know, below 20 minutes. And yeah, they like that at IT. But this is going to be a little longer because I got a lot of stuff to get to. This is a group that I like, very strong move here from Quanta. I mean, if you didn't get it here, we had this on our ready list. And if you didn't get it, it's kind of extended now to be buying it here at, 420, and you could have got it here at 320. But, that's just the way it goes in trading. You don't chase that performance. At least I don't. You could buy it here at 420. It'll probably be 500 by Christmas, but uh, I don't chase that. It's just a little extended from the 3.3% from, excuse me, from the 5. But a nice move last week for that groups. Sterling, another one, just a really strong stock. These are, yeah, 7%. AGX is one that I did have on my ready list. I'm going to get to that a little later on, up 14% last week. You can see it's still consolidating within that base, just extended from its moving average, 6.2% above the 5. But yeah, just a lot of stocks in this group are showing strength. EME, MCore group breaking out on Friday, on 10% move. MTZ is another one in the group. Yeah, just powering higher and Eaton. These are like the data center power plays that are just working. All right. And what Vert? I think Vert reports this week. Yeah, I'm going to get to that in a minute. So anyway, those are strong names. And I did want to get, going back to the energy names, the OKLO, the LEU. Now, LEU, I point out every weekend that this is like the leading stock in the leading group, and people want to own it. How do I buy it? Well, when it pulls back here to the 21, that's an opportunity. And you say, well, it's up 200 and something percent this year. If I go through this exercise, um, if you'll bear with me here in a minute, I will get this 262% in this year, right? So people think, oh, it's over, it's up so much, but stocks that go up 500% start by going 100 and 200, and this one's halfway home here. I think it's going much higher. I could be wrong. I'm often wrong, but never in doubt. And this one, yeah, I just think this has more juice. It was down 3 something percent last week, pulled back to its 5 here. So maybe that's your opportunity to undercut the 5. It had an inside day on Friday. So maybe that's an opportunity here. I might put that one on the ready list here. This one looks pretty good. LEU and the other ones in the group, SMR, just super strong stocks. They're up a lot this year, but I still think they're going higher. And NNE, this one's still within a base here, not quite as extended as the others. You can see it was up 11% last week. Yeah, 40.10 would be the buy point. Little extended from the 5. It's 8.6% above that moving average, but man, it's still, consolidating within this base, in my opinion. Even though it's extended from its 5, this is still a nice little base here that it's trying to move out of. Darvis box, if you will. So 48.05 would be your standard, trigger, but I would get it down in here if you could, around 40, 41. All right, that's enough for that group. Another group that I was totally interested in is Schwab, Charles Schwab. Um, they had an announcement, some news last week, and this thing's just powering higher, surfing that 5. Big volume, big market cap, liquid, leading, bank stock for sure. JP Morgan's another one that's just grinding the 5 higher, just surfing that 5, hanging 5 on the board here, broke out of the double bottom base and like a lot of stocks and just keeps moving higher. And the one that The bank stock that really intrigued me was Wells Fargo because it sold off with the earnings report, undercut the 21. The earnings report wasn't that bad, but they had a terrible reaction, and now it made a new high last week. So it went from, 83.94. After earnings, it hit 77, and now ripped higher, made a new high on Thursday at 84.83. So bank stocks looking good, and then some of the gold stocks, one of the top groups, top performing groups is these gold members, Goldfinger. This is AU. Had it on I think I had it on the ready list the week before. 46.90 would be the buy point. A little extended now, but pulling back here the last couple of days, may be able to get that one once again. AEM, excuse me, AEM, Agnico Eagle. This one's got this cup with handle pattern near a buy point. So I know a lot of people don't like gold, but this is one of the top performing groups in 2025. So, I'm going to continue to monitor these and highlight some of these names here. And I like this one too, Wheaton Precious. And every morning I post the gold and the commodity prices. So you got to pay attention to that because they do. And this gold has been rising as well as these stocks. So Wheaton Precious looks good to me as well. So precious. So that's just a few of the gold stocks that have been performing well. And also the steel names, CRS, Carpenter, and ATI. This is another group that's been really strong. And those are both going to report this week. Okay, I'm going to get off the themes of, yeah, because I could do this all day. But I'm going to move on to some of the trades that I had last week. And the prior week, I had no losers, all winners, incredible. But, that only happens rarely once a year. And so last week was more normal. Had some winners, had some losers. AAOI, I like the stock. I still like this stock. I just expected a pop here, and it finally did on Friday. But for the week, no bueno, down 5%. So that's a losing trade. See, the prior week it had this 3 weeks tight, and you expect a little bounce, but it went the other way, and that's just part of trading. That happens. They don't report until August 7th, so maybe still one to watch for next week. But I did have some winners. I mentioned AGX earlier, so that was a winner. And then I had what else did I have on here for winners? Because I had some losers. I know that. MP was another one that I put on as a trade. And this one I still like. I would say this would still be on the watch areas. It's flagging. After a big move higher, it's flagging, volume drying up. So I still like this one. That'll be on the ready list this week as well. Oh, another loser last week was CrowdStrike, which really disappointed me because it pulled back to its 50 for the first time since the breakout. And this is an uptrending market. This is a leading stock. And this one just, didn't get any bounce. It undercut the 50. Now it can rally next week back above it. But this is part of the reason why I'm a little more cautious too is leading stocks like CrowdStrike and Netflix have undercut their 50, Zscaler. Yeah, so this is, and it's just, I get it. It's a rotation into other groups. So as those leaders from April 7th to now start to falter, there'll be some other stocks like I just showed you with Fix and some of the others that will take their place. And I don't know, I had FOUR on my ready list last week. Didn't do anything, just flat city. Still on the ready list, just forming this long, elongated handle, just flat on the week. So we want to do better than flat. When the Nasdaq's up 1%, we want to be up 2% or more. All right, I think that's pretty much the gist of my trades. I had IO in Q on the cup with handle, didn't bounce, just kind of squatting here on the 21. You don't like to see these stocks squat. VST was another one. This was a loser that I was expecting a bounce, and it was down. Well, it wasn't down. It was flat on the week, down 0.5%. You just expect, more of a bounce, especially with that GEV report. But yeah, it didn't do much last week. It did, the one day. I mean, if you're nimble and quick, there's the quick and the dead in the market. It was up to 207, so you sell the spike there. You had a winning trade, but for the week, just flat. All right, that's enough of that nonsense. I want to get to and the other one, excuse me, DoorDash, one of my favorite stocks. And this one to me is still actionable. But they're reporting on August 6th, and I just like it longer term. You can see it broke out of that double bottom base there, and just longer term, this thing is a monster. That earnings line heading north. It just had that 3 weeks type pattern, then it ran up nearly 10%. Then it had a 4 weeks type pattern, and that's why I put it on the ready list after the 4 weeks tight. And it was up 4.5% last week. So that was another winning trade at mcstockcharts.com. Anyway, that's it for me. Thank you for watching. Except in honor of the great Steve Jobs, I have one more thing, and that's earnings this week. And we have Celestica reporting, and I think they're going to do a lot better than Flex. They're reporting on Monday after the close, so I'm looking forward to that. SOFI reports as well Tuesday morning. Spotify, interested in Spotify because it's done what Netflix has done. Made that high 785 on June 27th, now undercut the 50. And I like stocks that pull back heading into the print, but I don't like stocks living below the 50. That thing's got to bounce, and I think it will with a strong report. At least I gotta stay positive with my Spotify. Visa reports this week. That's a steady Eddie. If you just look at Visa over time, she's just put it in your retirement account and forget about it. The crypto folks would say no way, but that's okay. That was another area that I was going to get to crypto, but I kind of blew that. Starbucks reports this week, the 29th, Tuesday after the close. I think they're like the boomer category of coffee houses. The old people like them, but the younger folks are, they're going to other places. Bougie type of coffee joints and Dutch Bros kicking their butts. I went to four Dutch Bros, in Northern California, Southern California, Northern Arizona, Southern Arizona in the last month, and I get the same experience at each one. Very friendly customer service, impeccable customer service. Their employees are super happy. Happy customers make happy clients. The lines are fast. The drinks are fantastic. And the younger crowd is going to Dutch Bros. Why is this thing at its 200? I have no idea. If you listen to their presentation, which I did, the CEO was talking about all this bullish stuff. I was expecting upgrades, and all Wall Street did is sell off for the last couple of months. Their food items that they just introduced, just brought out, she said was 2% of sales already. And so each of these Dutch Bros that I went to, I asked the employees there how the food, and they said people are ordering the food a lot. And so it's not just, a kind of an item, on the side. This is something that people are ordering a lot. And it was consistent at every place that I went to. The employees said the same thing, the exact same thing. Yeah, so they're busy, they're growing, and I think once they get to New York, Wall Street will wake up, and this thing's going to rally eventually. If you look at the weekly, excuse me, the monthly, you can see this had the same profile as like a Robin Hood, but Robin Hood is broken out, obviously, and I'm going to get there in a minute. Anyway, that's my story on Starbucks. Screw them. I don't like Starbucks. All right, Seagate Technology, they're going to report. You can see this is just flattening out. Caution ahead of the print, right? Think it's going to be a good number, but there's just caution. That's why you have to be cautious here. We've seen these risk events where the stocks get destroyed on earnings, and you don't want that to happen to you. So you have to adjust accordingly. I had a big position in GEV. I had to sell half of it before earnings because I didn't know it was going to go up. Could have gone the other way. And so when it jumped up like that, I bought back more. So what I do is like if I sell half, I have 100 shares, I sell half, 50 into the print. It's a good print. I buy back 60, a little more than before. Yeah, I'm paying a lot more for it, but it's like insurance. You pay for insurance too. You hope you never use it, but that's just a story, and I'm sticking to it. Meta Platforms. Yeah, they report this week. Nice pullback ahead of the print. I think I think Meta, Microsoft, Google, those companies are just killing it. Amazon, yeah, I think they're going to have really strong reports this week. The expectations are pretty low, and I think they're going to jump over that bar. But that's what this is all about. It's been running into the print, right? Because I think, Wall Street knows these guys are going to kill it. Who else reports this week? Robinhood, I mentioned them earlier many times. This is one of my top holdings too. It ran from 29 to what was it, 101.13. It's a 242% move or something. And people ask me, what the hell's wrong with Robinhood? Well, it doesn't go up every day or every week. They're reporting earnings this week. It went from 113 to pull back to 100. Yeah, it had a down week last week. It was down 4.5%. But just, an inside week, pulling back to the moving average, that looks fine. You got to have a little caution. You can't just go willy-nilly into earnings. You're going to get hammered that way. So, yeah, I think I'm going to sell some into the print because I don't want to have a 15% portfolio position in Robinhood going into the print. That's a good way to lose money and get hammered quickly. And it doesn't feel too good. Carvana reports pulled back to the 50. And once again, I think they're going to have a strong report in bounce. But, anything can happen. I mentioned Vertiv earlier. They're reporting on Wednesday. That one looks strong. Roblox has been just a monster. It's all fun and games. This one was up to did it hit 130, 128? Yeah, pullback slightly last week. Not much of a pullback. Yeah, 4.5% after rallying from what, 50 to 130. Yeah, thank you very much. That's a nice move for Roblox. And I mentioned earlier the steel stocks are reporting on the same day. Carpenter and ATI on the 31st. Apple, of course, I got Apple. These guys are no innovation here, no growth, 5% sales growth. Yeah, services, watches, phones, computers, iPads, earbuds. I don't know. Apple did no innovation. Reddit. This is one that I want to talk about. If you looked at the Google report, and I know Google has YouTube and search, and they have a lot of other stuff, but it's in the same internet content. Same group, 28 billion market cap, not a small company, but I go to their pages and I think they've been taking market share. There's been a lot of, I think they're going to show subscription growth and the advertising dollar, the advertising spend has been pretty healthy. And I think they're going to have a strong report. Now, if you look at the weekly, you can see from the IPO, they had this nice, base and then ripped higher. It was a good performer in 2024. Then it peaked at 227 in February, then had this little base here. So this is a nice little pullback. Got ahead of itself. Now it's forming this base. You can call this a cup with handle, if you will. Yeah, it looks to me like just a shake out here. Yeah, there's your cup with handle. I think they're going to report a strong quarter. I'm going to have a little position in there, maybe a 1% or 2% position. I think they're going to kill it. I could be wrong, and it could go back to 100, but I don't think so. All right. You got to have some conviction. And the last one I want to talk about is Coinbase. They're reporting as well. I think they're going to have a strong report. And if you look at crypto and people, that there's people who just, that's all they buy is crypto, and that's fine. Like I said at the top, whatever works for you, whatever strategy, whatever you're comfortable with, whatever you can tolerate. If you don't want to, have an individual stock exposure, you could just buy the ETF, IBIT. Or if you want the Ethereum and Bitcoin exposure, the one that I like is Galaxy. And this is one that I put on the ready list and I just screwed up. I was a week early and it pulled back. If I go to the weekly here, the prior week here, and then I took it off my ready list. I should have left it on, but I took it off. Yeah, that week it was down 5%. I took it off and it only went up 32% the next week. And then last week it was up 13%. But this has got a buy point there right at the 26.60, call it $27. It's trading here at 30 and change. It pulled back to the 5 on Friday, found support, bounced. I still like this one, and I think maybe, you might be chasing it a little here at 30. But if you look back 6 months from now and it's at 60, you're going to say, I should have bought it at 31 or 32. That's just my feeling with this one. It's got the Ethereum, Bitcoin exposure. And anyway, that's it for me. There's a lot of them. I couldn't decide which one to buy. I mean, I like this one, the data center play. This one actually fell on Friday 2 days in a row. The first time it sold off 2 days in a row since back here in June 13th. So it's been a while. This one's been a powerhouse. And the other one is CIFR. By the way, Iron, I think is still undervalued. I think, with the Core Scientific deal going through at 9 billion, Iron is worth, at least, I don't know, 15 probably. And this one I like too, kind of flagging here, little flag pattern, and just biding time here, pinching in. I got to go back to REN because this is one that I really do like. 3 billion market cap. They have three times the capacity as Core Scientific, which Core we've bought for what was it 9 billion, and this thing still at 4 billion. So this is all you need to know about CoreWeave. And I haven't mentioned CoreWeave for a while, but since I'm on this kick, I might as well now. And earlier I thought this could do what eBay did back in 98, 99, but obviously that model that precedent analysis failed. It made that peak at 187. And I know people, tease Jim Cramer because he was saying it's a buy, it's going higher, and it's done nothing but sell off. And once it sliced the moving average here, and it tried to rally back up, it got rejected. And I know a lot of people like it and put it on their ready list and want to buy it, but this to me is either a short or an avoid, either way, because the market is telling you that it does not value their stock at 9 billion for Core Scientific. It's at 4 billion, so it's probably half of what it is right now, or when they announced that deal, which I don't have that date in my head right now, but it sold off pretty hard when they announced the deal. That could have been it. I don't know. Maybe earlier, 158, but it's got to close at 115 on Friday. So this isn't a clear downtrend. You can see the short-term moving averages heading lower. The 21's about ready to cross below the 50. So CoreWeave is a total avoid if you don't short it. All right, that's it for me. Thank you for watching at mcstockcharts.com. We never give up. Have a great weekend. I'll post Monday with some new ready list. I'm seeing some stuff that I like. Never give up.